Stock market analysis and projections on the S&P 500. Important information. Please do read this slide and you get a good sense for how we approach our analysis and what that means for you and how you use it as you engage in the markets. Stock market analysis. Okay, we're going to look at the S&P 500 weekly and daily using the SPY. And the big question, and what I presented at the beginning of the show, is the analysis changing? We have been negative. We have seen the market in a correction. That correction did come. We were originally looking for 6 to 8% on the downside, and then we downgraded that, looking for 10 to 13%. And now the question is that changing? Was that downgrade premature, and is the market actually getting better after the S&P 500 has had like 180 point uptick? And that is, of course, very significant. We always want to be flexible. We want to make sure that what we present is always the highest percentages of what could happen in the markets. And sometimes the lower percentages do happen, and that could be what's going on right now, but not quite yet. And I'm going to show you what that takes and what the analysis, how an alternate analysis might look. And I think that's very important. So let's take a look here as we look at SPY. This is the SPY, looking at the weekly chart, as you see over here, and the daily chart, as you see over here. And of course, we do cycle analysis. On the bottom are the cycle brackets. These are just what the energies look like in the market, how money flows should line up as they rise and correct, as you see in there. In this case, there is a minor and a dominant cycle within these harmonic families that you see right there. Now, let's start out at the daily chart, because what's important in here, not only for you to see the magnificence of the harmonics that are in here, but also what's going on right now and what that means to the market. Now, our assumption was that this whole cycle over here would be a correction, and that would continue then on the downside after some minor rebound in here. Now, the rebound has been strong, and what's happening is that the momentum conditions have improved on the short-term basis. And you can see what's happened in here, looking at the slim ribbon, is that it crossed over right over here. You get the green arrow, and the slim ribbon PO, which was giving negative information, turned neutral, and now has turned green. So that's positive. That blue arrow right there is showing you the change that went on in the market. Now, this is the key level right over there, around 455. On the SPY, 4550 on the S&P 500. That represents the 78.6%. Normally, when a market is weak, as you see right over here, and then gets up and can close above the 78.6 level, what that tells us is that the negative longer-term energies that are pushing the market down, the outflows of money, have dissipated. It wouldn't be able to close above this level unless the selling strength had significantly gone away. That's what makes us look at changing when we see it get up to these repair levels. And when it gets up there, we always have them labeled because we want to make sure that we understand what's going on. So this could reverse from here and come back down, and our original analysis be correct. I'll show you historically how that has happened. And the other thing, of course, is that it could get through here and the market could be strong. And then the next level up over here would be around that 460 level where it reversed from right over there. We'd be looking for that level. So that would be what you have in here is a more positive track that it could take if it could get over the 455 level and hold over there. So the important thing to look at now is how does that look on the intermediate chart? And you can see that right over here, that the momentum here is still negative, and it's still in this period of risk. But we will have to revise this if we can get over that 450, that says 454, it's actually around 455, through that warning level right over there. Now, I want you to note the importance of the shape of what's going on right now. And that is, in the past, we've had these ABC corrections in these periods of risk. What does that look like? Well, right over here, you can see as it broke down in the period of risk, It then had a reversal back to the upside and then moved down again. So it was an A, B, C correction right over here, or decline. The same thing happened right over here in this cycle, in this period of risk, where you had the decline and then the rally back, and then it moved down again in that A, B, C correction that you see there. Neither of these right over here got up to the 78. This got up to only about the 61.8. The same thing right over here. This one right over here, A, B, C, as you can see, got very close to that 78.6 and then reversed to the downside sharply. The question is that what's going to happen here? Is it going to reverse to the downside as these other ones have done? Even in this bullish cycle right over here, that was the beginning of this bull market, that ABC pattern gave you a pretty good sell-off, where after it failed from near that 78.6%, it fell from 408 here down to about 388. So there's about 20 points on the downside from that level, and that would follow the pattern in here. If it gets over that 455 level or so, that would change things, and that would make the conditions different. And I want to show you what that would look like. So right now we're looking for the highest probability is that these rallies would fail and it would come down again. However, were this to get above that level, and then you would see the likelihood of an upward turn here in momentum conditions, like we see here only in the short term so far, it would then change. What would it look like then if that happened? And it would look like this. There's your alternative right there, and that would be the upward turn in this cycle right over here coming early. That's right now a lower probability, but that's what it would look like. And then if that's the case, it would point to the S&P 500 getting up to these resistance levels, these fib extensions. This is 470. This is about 473. If it could get through that level and if that momentum can turn. That's a big if. The market has to prove that it has that kind of strength. And this morning, it tried to get close to that, but it still was not able to. And we still have to be looking at this is the actual analysis with the likelihood that it will be continuing to correct and then move down again. Earlier in the show, and if you did not watch the whole show and you're only watching a clip, you would have seen what we described as a very unusual condition of the 7 mega cap stocks in the S&P, accounting for a huge amount of the gains this year. I showed you a chart on that, and how more than 50%, them being up more than 50% this year, 7 stocks, the 7 mega cap stocks, where the rest of the list is only up 4%. So that heavyweights in the mega caps, that's significant. They're slipping today. They're moving to the downside, and the NASDAQ has moved to the downside also here on Friday. But still, looking at these charts, you can see the strength in here. This right now is looking like it has the potential for a reversal day and failing from that repair level, but we don't really know if that's true yet. So that's the important level. That's what we're looking for, and we're not shy about changing our analysis if that is what the market is telling us to do. Right now, it's threatening to do so, but it hasn't done it yet. And the market could turn down, and the question is, will it be another ABC pattern right over here and another failure which would take it down maybe as much as 20 points on the S&P 500 back down under these levels right over there in this cycle right over here? That remains to be seen. I'm certainly willing to become more positive if it makes sense to do so, and we can see momentum conditions are suggesting something could be changing, but it's not enough yet, and a failure from here would be significant. Moving through that repair level will be significant. I don't really like giving an either-or analysis, but sometimes we're at those points where that is what makes the most sense. Is the analysis changing? Well, not yet, but it certainly could be. And I'm not afraid to do it, and neither is anybody on our team here. We are very proud to be flexible when we need to be, and that might be the case. So we'll see what happens over this next week and looking at this key level. I hope that was extremely informative to you. You can get a huge amount of our information by taking advantage of our level 2 special trial. This is only going to be around for about a week. So make sure that you click that Learn More button on the top of the askSlim.com website, and you will be able to see everything that is included in this huge offering, $29.50 for so much especially for short-term and swing traders. There's so much in there. Our live charts available to you, a huge amount of charts and lessons available to you. And for those of you that struggle with trader psychology, there's about 30 videos in there, plus guided visualizations that I walk you through, getting you through some of the tough spots. So please do take a look at that special trial for our level 2 membership.